Hello, everybody. My name's Di. I'm one of the Money Max guys. And in this series, we are learning how to bank like a bank. So far, we've discussed closed-ended loans, mortgage amortization, and interest cancellation. And today, we're going to dive into open-ended loans or lines of credit and offset accounts. So what's different about an open-ended loan compared to a closed-ended loan? Well, first of all, money goes both ways. You could make payments in and turn around and take withdrawals out. You're also able to make, at minimum, an interest-only payment rather than a fully scheduled payment. And rather than being driven by an amortization schedule, it's driven by a draw period, meaning that money applied today affects today's balance. Literally, you make a payment and the clock stops. They recalculate your principal, they recalculate your interest, and the next payment is based on that balance because it calculates interest on an average daily balance. Friends, banks are smart. They are so smart, and they understand and take advantage of a concept called no stagnant money, which simply means money's always in motion. It's earning interest, it's canceling interest, but it never sits idle doing nothing. Smart investors, they do what the banks do, and they move the right amount of money at the right time from one account to another, and then they let it sit for the right length of time. You know what else the banks do at the close of business every day? They sweep all the money out of our checking and savings accounts and they invest it into high interest bearing accounts for themselves and their special clients. Yes, they use our money to earn interest for themselves while we sleep because they know that money is the best employee they will ever hire. It works 24/7, 365. But wouldn't you like to have your money working for you? Wouldn't you like to have a sweep account of your own? Well, friends, you can. There's another word for a sweep account. It's called an offset account. And an offset account is an open-ended account. And it's just a place where you can park your money for a specific period of time where it's going to earn you interest, cancel interest, or in some situations, it can literally do both things simultaneously. The Money Max account is compatible with three different offset accounts. The first one is a home equity line of credit. This was our flagship product when we introduced velocity banking to the United States back in 2004. This was our only offset account, and it allowed our clients to rapidly pay down their debt and cancel a ton of interest. But then in 2008, the financial sky was falling. We had the mortgage meltdown, and banks, they flat out quit issuing home equity lines of credit. So the founders, they invested another $19 million in research and development, and they retooled the entire program. And after several years, they were able to eliminate our reliance on the home equity line of credit. And that's when the floodgates opened. Because, friends, if you don't need a home equity line of credit to drive the program, you don't have to be a homeowner. And if you don't need to qualify for a home equity line of credit, you don't even have to have good credit. So now the Money Max account works on any debt. If there's a balance, an interest rate, and a payment, we can help you crush and destroy it. After that, we spent a full decade searching for the perfect offset account. And in 2021, we entered the infinite banking arena and we rolled out our third offset account, which in my opinion is our best offset account. It is a high cash value permanent insurance policy that not only allows you to cancel interest and pay off debt in record time, but you're able to earn interest and cancel interest simultaneously using the same dollar twice. Now, friends, if you are finding value in this series, be sure to like, share, and comment. And don't forget to ring the bell and subscribe so you don't miss out on future episodes.